A lot has changed at Coinbase over the last few years, and one of the big things is the company is now focused on subscription and services revenue instead of just trading. This was a company that during the pandemic in particular, when the crypto boom happened, they were making a ton of money on trading. That is still true. There's still a really big business for Coinbase, but if you look at their financials and where the company is focusing, where they're talking about on their conference calls, a lot of it is on other services. They want to be basically the AWS of the crypto space. That is something that was mentioned multiple times by CEO Brian Armstrong. This is something I've been talking about for a while here on Asymmetric Investing. It's one of the reasons that I'm bullish on Coinbase stock. So let's go through the earnings and show exactly why this is a company that you should look at very differently today than the way that you were looking at it a year ago. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's get into the high level look at the numbers. This is the high level numbers, $1.4 billion in revenue, $599 million in subscription and services. That was what I was talking about earlier. I'll show some context as to how much that's grown in just a second. Adjusted EBITDA, $596 million, and net income a lot lower than that at $36 million. USD reserves. This is something that is another point of strength for Coinbase, as it does have a very good balance sheet. $7.8 billion. ETFs continue to be a tailwind. Bitcoin ETFs were first this year. Ethereum ETFs hit the market recently. And Coinbase is going to be the custodian for most of those ETFs. Basically, they're going to hold the cryptocurrency, keep it safe. They're not actually the ones that are going to be launching ETFs. So that's the way to look at this. This is another services revenue for them. Here's the general breakdown of their revenue. You can see that consumer revenue is kind of all over the place. This is actually based mostly on volatility, because this is going to be the number of transactions. They're going to take a fee from each transaction. So volatility was actually down from the first quarter to the second quarter. That's why revenue dropped. Institutional revenue, this is an area where Coinbase has really been focused, is on institutions. The problem with that from a money-making standpoint is it's just not very high revenue and not very high margin. But you can see that $780.9 million in revenue is significantly higher than it was a year ago. So things have recovered, not back to where we were during the crypto boom days, but this is going to be a money-making business at the very least. Stablecoin revenue. This is the thing that I've been talking about a lot on this channel. Number of sources for stablecoin revenue, but the main one is from the USDC token. So Coinbase started the USDC token with Circle. Circle now runs that token, but Coinbase generates revenue off of the assets that are backing that token. So when interest rates are above zero, the assets backing the token are held in very low risk bonds and savings accounts. That's going to generate interest. That's what ultimately becomes stablecoin revenue. So you can see that the run rate is almost $1 billion. Now, falling interest rates, which we've seen over the last few weeks, is actually going to hurt this revenue. So something to keep in mind, but this will be volatile. What we want to see is more stablecoin usage. That's where things like the Base blockchain, getting transactions to under a second and under a penny, will increase the usage of things like stablecoins. Blockchain rewards continues to be very strong, more than double from a year ago to 185.1 million. Interest and finance fee income, this is from interest from the cash that's actually on their balance sheet, so that's $7 billion or so. Custodial fee revenue, again, this is going to be where you're going to see the ETF revenue, not a huge number, but a growing number in other subscriptions and services. You add all these things up, you get $599 million in revenue, nearly double from what it was a year ago. This is really what we should be focusing on, is this number. And this is what I think you should focus on. This chart shows blockchain, stablecoin, and custodial fee revenue since 2020. And these are all trailing 12-month numbers, but you can see that this has grown consistently since the June 2023 quarter. Now, they have not always called out stablecoin revenue, so that's why that doesn't show up besides the last 5 quarters. But the general trend here is consistent, that these services and subscriptions are starting to grow as a percentage of the business. And this has really been the focus of a lot of the development. The management has been doing things like wallets as a service, things like the Base blockchain. All of this is to ultimately build utility. And really the groundwork is just being built right now. We're not really at the point where this is taken off in a lot of financial institutions. Companies like Stripe are starting to integrate things like the USDC token and cryptocurrency, but not a big percentage of what they're actually transacting around the world. But think about this, a decade from now, this is very possible that this can be a much, much bigger business. And that's ultimately what I'm excited about with Coinbase, is that they're building this foundation. And if it's successful, the way that an AWS was in being the infrastructure for mobile applications, cloud services, Coinbase could do a lot of the same things for the blockchain. So that's really the reason that these numbers right here, total subscription and services revenue, is what I think investors should focus on over transaction revenue. And these aren't quite crossing yet, but you can see that in the next maybe year, subscription and services revenue will be more meaningful from an income statement perspective than transaction revenue. That would actually be a good place for them to be in. Trading volume continues to actually trend away from some of the bigger tokens. This is something that's been happening for multiple years. Bitcoin was really where Coinbase started, but that was gone from 40% of revenue to 35% of volume, I should say. Ethereum from 23 to 15, and all other crypto assets are increasing. So diversifying away from some of those bigger tokens. Here are those $7.8 billion in USD resources. 4.1 billion of that is in money market funds and government bonds. Another 100 million in corporate cash. Got some USD. You got some USD and corporate cash sitting on the balance sheet as well. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So good quarter for Coinbase, maybe not the best quarter, also not that much of a reaction from the market. But what I think we're seeing right now is really building the foundation for long-term growth. Management talked a lot on the conference call about the progress that they've made in Capitol Hill in the US. So getting both sides of the aisle to kind of push forward on maybe cryptocurrency should be something that we regulate and actually create frameworks around, give regulatory certainty, as they have long talked about. The other thing is building all these tools that once companies do want to adopt something in cryptocurrency or on the blockchain, how are you going to actually build that? Well, if you can go to Coinbase and you can just plug and play different tools, different smart contracts, build on the base blockchain, for example, that would be a way to add utility to the blockchain, maybe do things a little bit more efficiently, whether that's moving money around, whether that's doing loyalty programs, whatever innovative things people develop. That's really where Coinbase wants to be, is be that foundation, that cloud service, the blockchain as a service, because they've got wallets as a service, all kinds of different things. And the interesting thing is that Brian Armstrong is really talked directly about, hey, most people should not have to even understand how the blockchain works. It should all just happen in the background for them. And so I think that's absolutely the right place for Coinbase to be, is abstracting away the blockchain for most of its users. And if it can build those tools, and if it can gain adoption, that adoption could grow extremely quickly. We've seen those subscription and services growing at almost 100% rate. So if that continues for a number of years, that's how you get these phenomenal growth stocks. So I think Coinbase is heading in the right direction. Not the cheapest stock as it stands today. The market cap is still at $50 billion, but if this momentum continues with Coinbase adoption, with adoption of cryptocurrencies, we get some regulatory certainty, you get actual investment in innovation in building businesses on the blockchain. This could absolutely be a home run over the next decade or so. But let me know what you think about the quarter from Coinbase. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.